When you are earning 7-figure, taxes are probably your single biggest silent partner. Every year, the IRS quietly tax 35% to 40% of what you make. So the real game isn't just making more money, it's keeping more of it. So here's the part most million-plus earners missed. The biggest check you will ever write to IRS usually doesn't come from your salary. It comes from when you sell something big, like your company, your stock, your property, or that fund you have been sitting on. What if I told you that by changing when you sell, not what you sell, you could save yourself thousands of hundreds of dollars? That's the core of this video. How the wealthy use timing to turn a taxable event into a wealth building opportunity. Hi, I'm Mia. I'm here to help you in this journey. Why timing matters more than ever. Think of taxes like the ocean tides. They rise and fall depending on when you stepped in. Under the new big beautiful tax bill that was passed in July 2025, the official capital gain rate still say 20%, but that's not what most high-income people actually pay. Here's why. Every time your income crosses a hidden line, your deductions shrink, your investment tax kicks in, and your state tax pile up, and suddenly your 20% turn into 28 or 29%. So timing isn't just about markets. It's about the invisible lines. Sell at the wrong time and you pay at the top of every one of them. Sell smart and you slip between them. Let me Amanda want to show you some example to help demonstrate the concept a little bit clearer. So Amanda lives in California and earns about $1.8 million a year. She was ready to sell $2.5 million of stock. If she sold it all at once, she would owe about $900,000 in taxes. So instead, we split her sale, half in December 2025, half in February 2026. Same total sale, but split between 2 calendar years. That simple move saved her about $160,000. She didn't hire an offshore firm. She didn't move to Texas. She just used a calendar. That's the power of timing. Now let's move to what actually changed in 2025 and 2026. What the big beautiful tax bill really did for us. First, the rates stay the same, so the long-term capital gain is still 20%. The game changed around the edge. Your deductions, your charitable write-offs, and your state tax cap all start to tighten when you hit certain income levels. In 2025, you can still deduct more, donate more, and structure more flexibly. In 2026, those same deductions start shrinking for top earners. So 2025 and 2026 create a 2-year window. That's your runway. If you know how to use it, you can move big money under the lowest possible tax drag. Now let's talk about the $1 million game plan. Step 1, know your number. Write out roughly how much you expect to make this year in salary, bonuses, tax, business profits, dividends, rent, everything. Then add the gain that you might trigger from a big sale. If that total is climbing over $1 million, every new dollar gets more expensive in tax. Step 2, split your big sales. If you plan to sell an asset for millions, don't do it all at 1 year. Sell part in December and part in January. You just turn one big tax spike into 2 smaller ones. That's often the simplest 6-figure saving move you can make. Step 3, use charity as a tax tool. If you are already planning to give, do the strategic way. Instead of writing a 100K check, donate 100K appreciated stock. So you skip paying capital gain tax and still get the deduction. If you want flexibility, pack it as in a donor advised fund and give over time. Step 4. Balance your winner with your losers. Every investor has something in red. So selling the loser in the same years you take big gains, cancel out part of your profit for tax purposes. It's like giving you your bad trades to fund for your good ones. Step 5. Think in installments. You need to sell a business or a property. Ask for part of the payment now and part later. You only pay tax as the payments come in. So that keeps your income from spiking and your rate from jumping. Step 6. You want to plan around your state. High taxes state like California and New York can add like 10% or more. If you are consider a move or have property in multiple states, timing which year the sale closes in can change your state bill dramatically. Step 7. You want to coordinate with your estate plan. Starting in 2026, the lifetime estate exemption rises to $15 million per person. If you are sitting on large appreciated assets, this is your moment to give or repositioning before Congress changes it again. Next section, how we want to put this all together, why this matter to you. So why does all this matter to someone already making 7 figures? Because at that level, the biggest expense you will ever have is taxes. And unlike most expenses, this one is optional. If you plan ahead, this is how the truly wealthy operate. They don't just react when the tax bill arrives, they engineer when income appears on paper. So they build their exits around the tax calendar, not the market calendar. When you control timing, you control outcome. Remember Amanda, she got 160K saving. It wasn't luck, it was planning. And you can do the same as well. So 2025 and 2026 tax year are your planning window. After that, deduction tighten, threshold shifts, and flexibility fades. So if you're sitting on a big stock position, a property you might sell, or business equity you plan to exit, this is your moment. Don't wait for tax season. This isn't filing a strategy. You want to sell strategically, donate intentionally, keep more of what you already own. That's how $1 million owner turn capital gain into capital strategy. Thank you for watching. I'm Mia. I will see you at the next video update.